Hey, Bulls and Bears, JJ here. It is Wednesday, February 26th. The markets are still looking very, very sick. The Dow Jones, especially, tried to rebound earlier, down over 100 points as I'm recording this. The Nasdaq and the S&P pretty much treading water, up just fractionally right now. That could change in just a few minutes. And something else I want to talk about. This would be funny if it wasn't so scary, in my opinion. Just in the last three videos, maybe the last two or three videos, I talked about how oil prices were dropping, and then I joked around, kind of half joking, kind of not, saying, well, we'll probably see some explosion or fire occur. And this, again, it's unbelievable, but it's really not. This morning in Carson, California, Wednesday morning, huge explosion. Let's go over to Brian Hayes' Twitter feed real quick. This is out of Carson, California. And you could feel the explosion, they said, miles and miles away, several cities away. And the flames could be seen as far as 20 miles away. And this is the biggest oil refiner on the West Coast. So it's not just a small plant explosion. And I just talked about this, so I don't like to see this type of thing happen. But it's almost too predictable now when gas prices drop. You see some sort of event like this occur. And I'm not saying anyone did it on purpose at all, but what are the odds of this happening as gas prices were finally beginning to tumble? And of course, we know the big thing that's happening right now with the scare coming out of China, of the lower demand. Many economists out there predicting a global recession. And we talked about this in just the last few videos also, how this scare could be used as the excuse. That way, they can't put the blame on the actual system, the financial system, the fractional reserve banking system, all the debt that's been created. It's $250 trillion now and beyond that. Global debt. Countries are in debt. Corporations are in debt. Cities are in debt. Individuals, on average, most people are in some sort of debt. The debt-based system was looking for something to point the finger at, and this could be it. Now, I'm not saying the stock market's not going to recover. I actually picked up a few put options on an ETF that goes long on the stock market, believe it or not. Yes, I did buy the dip. When stocks went green, I went ahead. It's a very small position. Do not follow my trades because you do not know how small or how big some people are betting this. With everything happening right now, with a worldwide outbreak being threatened right now, I'm not going to bet big. This is more of just kind of a fun thing to do to see if the central bankers are going to continue their pattern of buying these sell-offs and keeping the stock market pumped up. Now they really don't have to because, again, they have something to point the finger at. And I think the bottom line is they don't want to take the blame. That way they can come in after everything crumbles and they can try to pick up the pieces and come in as the saviors and saying, oh, everything was fine. We'll just do more of what we did before the big event, caused the world economic system to collapse. So that way their excuse, they can come in, issue more debt, buy up more bad assets, rescue the banks, more bailouts, more money being funneled up to the top. Meanwhile, all the people that were sitting on these inflated paper assets, digital assets on a digital screen, they lost a big portion of their wealth. And of course, the insiders, they're not going to take a very big hit. The people at the top are not going to take any sort of hit. And even if they do, they'll just buy twice as much when things bottom out. And then when the Fed comes in and blows up the next bubble, they'll be sitting pretty and their wealth will increase once again. It's a wealth transfer and it's a continuation of the boom and bust cycle. Now, I'm not saying this is the bust. There's also an incentive for the current administration to keep this market propped up until the end of the year. But then again, too, even if the economy comes down on his watch, he could just point to this pandemic and say, hey, this is what happened. Everything was great. My policies were perfect. None of this is my fault. It's all the fault of this pandemic. And I just want to again point out one of the bright spots I pointed to was, hey, maybe these falling oil prices will lead to lower gas prices. And then I talked about the refineries. It depends on the refineries. Maybe we'll see some explosion and uh, So maybe we can kiss lower gas prices goodbye, especially here on the west coast of the United States. Let's take a quick look at some metals and some energy prices. We see oil and gold headed in opposite directions. WTI down over 3% today. Now, again, we'll have to see what this explosion today out of this plant here in California is going to lead to. Gold caught a little bit of a bid up over $11, hanging in at 16.46. Palladium up another $49. Palladium has just skyrocketed. Silver still hanging around $18. I do expect silver, as far as percentage gains, to outperform gold. That's just my opinion. And I'm still picking up silver bars. I know some people were asking me if I'm still doing that. Yes, I'm still picking up silver bars in between 10 and 20 ounces a month. Again, it's not a big part of my portfolio. I prefer not to put too many of my eggs in one basket, but just imagine the people that were 100% in long on the stock market, how they feel with these last 2 days of a 2,000 point drop in the Dow Jones and the huge sell off and the panic that we're seeing right now. Here's another one that has been beat down, and this is natural gas. Let's take a look at the chart here. And if it wasn't for this black swan event that just came flying out here in January, I would be long on natural gas, because look at this low. Let's go out to a 3-year chart here. Actually, a 5-year chart. Every time we see natural gas get down to this level here, we see some sort of correction back to the upside. And here we are to the far right. We're about at a 4-year low, a 3.5 to 4-year low right now in natural gas. With everything that's happening right now, I wouldn't want to place a bet on this one, but just from a chart reading perspective, it could be a very nice dip buy if you're into buying commodities. There's ETFs that are tied to natural gas, maybe even some calls on the options for an ETF that goes long on natural gas. All right, just some thoughts, no recommendations. I'm going to wrap this one up right here. The main thing I wanted to get out was the timing of this explosion, considering I was just talking about it a couple days ago. And there it is. Thanks everybody for watching. Ride the bull, prepare for the bear. Bye for now.